Good morning, traders. Today is the 12th of November. This is the TTScanner hot list video. We're going to take a look at these new hot lists as of Friday's close and go over some of the new triggers. We're looking at the TTScanner core, ETF core list. The core list is the primary ETFs that we use to trade using this weekly TTScanner swing trading system. We've been fairly simple in the sense that we've only got a couple of triggers, very few new triggers. We went flat on DBB just last week. We have a short trigger here that's about 4 weeks old. It's minus 9.5%. The markets have been rotating. So we've had, I mentioned this last week, that some of the newer triggers have been kind of weak in the sense that we've got a 6 or 9% rotation in some of these. We haven't hit our targets. We're seeing some real weakness. This is a short trigger with positive thrust over here, very moderate profit factor and very moderate, well, pretty strong win rates. But this is what happens when the markets move into this sideways, flat, basing, bottoming formation, particularly on a weekly basis. We get some bigger volatility. We could see some trending, and then it may move weekly, 4, 5, 6% against us. Now you need to understand that in if you take these into total consideration of what my services provide, we would only be trading these right now with 10% of our total capital. Meaning that if you were to have all of these trades taken, you would have, say, $1 million in your trading account. You're only trading 10% of that money into potentially these trades. You've got a 20% capital reserve of your $100,000 that you're actually trading. That means you're only trading $80,000 into these trades. And you're breaking these across, say, 10, 15, or 20 separate trading slots. That means that every single one of these trades would be worth about $4,000. So when you take 9% off of a $4,000 trade with an entry price of $44, you've got about $100 here, or 100 shares, and you've got a 9% of 44, so you got about a $3.50 risk. So you lost about $300 on a $400 trade, or a $4,000 trade. It's not really that much. If I were to calculate this in real terms, this minus 9.35% would actually be something more along the lines of 0.37, if I do the math right. It's a very small percentage because we're allocating only a very small 10% to our actual trading. So these numbers are very, very small. But the same thing affects here. This 26% winner on MJ, great short trade from many, many weeks ago, almost half a year ago. This would actually end up, instead of being 26%, this would end up being something more along the lines of 1.03%, something like that. This 25% here would be something like 0.99%, close to maybe 1%. This 43% here would be maybe 1.7, 1.8%. And it's because we're trading a very small amount of our capital into these trades. But still, it gives us an idea of what's going on in the market. So the US dollar trend long term is up. The XOP is long term up. XLE long term is bullish. MJ long term swing trading is bearish. ARKW is bearish. IYR is bearish 5 weeks ago and looking to continue to move downward. PBW, exchange traded clean energy, is bearish, and it's 3 weeks ago, and we're looking for it to continue, but it's got weaker thrusting patterns here. So now let's take a look at the core inverse list. Core inverse list, Chad went flat, which is the China 300. Yang went flat. This was last week as of Friday. TBX, the short treasury, is long. It's been in the trade for 7 weeks. It's got 2.4%, already hit the first target. TMV, which is again treasuries, is long in bullish. It's up 24%. It's already hit both profits, and that's again only 7 weeks old. EUM is long, 29 weeks. and it's got a 12% profit in the trade, hit both targets. And back down here we have ERY, Energy Bear 2X, has gone short. And this is a new trigger, 2778. We've already got 4.32% profit, has not hit targets, and it has decent thrusting to the downside, which is what I look for. So with these long triggers here, you can see here, all of these have negative numbers over here in thrust. That means that this trigger, even though it's 7 to 29 weeks old, doesn't have any real momentum in the upside for long. This short trigger has bearish momentum because it's negative here. That's a pretty good trigger. It's got a 0.86 profit factor and a 2.14 win rate. That's actually a pretty darn good trigger right there, folks. That might actually turn into a very solid trigger. Okay, next let's come to the value stock list. We got a couple of new triggers here in MRK and Amgen. Amgen's got a long trigger. We've already up, looks like 6.29%. And we've got the MRK is off 0.55. We haven't hit the profit targets. We've got decent thrusting. Look at the numbers here. 56.94 and 81.17. Although look at the profit factor and win rate. These are nominal profit factors. Decent win rates, nominal profit factors. We've got these triggers from last week. These are PFG and TVR, Travelers and Principal Financial Group. Principal Financial Group is up 9.83% with very strong thrusting. Travelers is off 0.10% with very strong thrusting. And again, look at these profit factor and win rates. So profit factor on Travelers is 0.56, and on Principal Financial Group, PFG, is 0.86. But the win rate here is pretty positive. This is neutral. This is, like I mentioned to you, probably 30, 40, 50% because the profit factor and win rate aren't very strong. And then we have older triggers. We have a couple triggers here, 4 and 7. Hasbro and Eastman Chemical, 4 and 7. Eastman Chemical's off 14%. It is a short trigger with very strong bullish thrusting. So this is something where we'd be very cautious of our stop. Let's see where we're at. 89, stop is 80. So we've blown through our stop. We'll probably get stopped out on this because we got in at 78. We're at 89.49. So we're actually above our stop. This will probably trigger out on Monday with our stop. And here we have 69.34. We've already hit our first target, 8.55% profit. Thrusting is downward, 63.40. So this is still below our stop. So this trade is active and still working in our favor. Next, we will go to the regular TT scanner list. We have XLC, new trigger from a week ago. It's off 2.77%. Not near our, actually it is already above our stop. This is likely going to get stopped out on Monday. Stop is at 49.65. We got in at 48.67. It's currently at 50.02. So that's out. IYR is 84. Stop is 80.88. This is entry price 82, 88. This is already above our stop. We're likely to get out of this. Short XLRE is 36, 37, 38. We're likely to get out of this on this rotation. We're going to see a lot of rotation. And again, I'm showing you these as of Friday. So understand the big rally last week is likely going to change a lot of things come Monday morning when we get new triggers. So this is kind of a recap. We still have these triggers here, but let me just check the rest of these stops. So stop is 110. This is 114. So we're likely stopped out of this. We're likely, that was QTech. We're likely stopped out of SOXX, and we are likely still in Nugget to the downside. Stop is 38.44. Current price is 33.49. then we are likely still in XOP. This is a long. We are stop is at 107.75. We're currently 159.14, and same thing with XLE. We had a flat trigger here on RWX, the real estate sector, so that was an actual trigger to get out and go flat. But these stop signals here are likely going to be updating on Monday, and that's fine. Like again, these are very small losses. 2.77%. If I do the math, it's going to be a 0.08 or something like that. 6.51 is going to be probably a 0.3. Sorry, 0.0, no, 0.15. They're going to be extremely small if you're allocating your money effectively, as I'm telling you. Remember these, let me come back over here, and where is it? Where is it? Here we go. So, ladies and gentlemen, when you're using my services, what you want to remember is that the rotational modeling system is the higher overview macro environment of how we want to allocate our money. It continues to execute a broad investment strategy telling you how to be invested. So right now we are 50% bearish CSPY, 50% cash, and this is for your longer term investment. We would be putting so hypothetically, you'd be in a bearish fund or something that allows you to make money to the downside, and then 50% of your money would be something in the US dollar fund or some sort of a low risk bond fund, something where you can, almost like a cash position. But we have the allocation systems here, which tells us how we want to try to allocate. So technically, from a primary allocation model, which includes stocks, cash, metals, and bonds, we're 10% stock, 65% cash, 25% metals, 0% bonds, although bonds are likely to change very quickly. In stocks, we are 10% stocks, 90% cash, 0% bonds. So remember, this is telling us that no matter what you're trading, you should only be trading 10% of your total capital into any trading endeavors right now. That means that any one of these types of triggers are going to be broken into one fraction of your 10%, as I mentioned earlier. So you have to look at it. We're in a sideways scenario. We're getting the market trends. We're executing very effectively. Our risks are, if we were to risk hypothetically 8% of 10% of our capital, you're talking about risking, potentially, $8,000 on a $1 million account. That's a 0.08% risk factor. Very, very small in total. Okay, so now what's happening, ladies and gentlemen, is we're in this flatlining. We've seen a big rotation. The markets have moved from bearish to bullish slightly. We need to see what ends up happening, but I'm going to tell you right now, ladies and gentlemen, we need to stay calm, protect our capital, don't freak out about what's happening in the market, and don't try to chase these trends. Right now, there's a lot of volatility in the market, and we're waiting for things to settle. Okay, guys, talk to you later.